Welcome to today's Explainer. Let's just jump right into it, guys, because we are looking at an absolute financial and technological earthquake. We're talking about the SpaceX IPO from June 2026 and how it literally reshaped the global wealth landscape overnight. For over 20 years, SpaceX was quietly building reusable rockets, deploying massive global satellite networks, and fundamentally altering the economics of space travel, all completely outside of the public markets. But when they finally opened those doors to everyday investors, man, it broke every single record in the book.
And the craziest part of it all, this staggering figure right here, $1.11 trillion. That is Elon Musk's estimated net worth right after the IPO, officially making him the world's very first trillionaire. To put that massive number into perspective, at this valuation, Musk is actually worth more than the combined fortunes of the next 4 richest people on Earth. Think about that. We're talking Larry Page, Sergey Brin, Jeff Bezos, and Larry Ellison combined. He hit a financial milestone that most analysts didn't think anyone would reach until at least the 2030s.
To really wrap our heads around this astronomical wealth, let's look at the sheer velocity of the growth. Thanks to that massive one-time step up from the SpaceX IPO pricing, his net worth has been growing by an average of about $29,100 every single second so far in 2026. Yeah, you heard that right, per second. That works out to roughly $2.5 billion a day. Basically, every time you blink, another median annual salary gets added to the total. It's just wild.
Now, what I find super interesting is looking at exactly where all that wealth is actually coming from. It really proves that the SpaceX IPO was the ultimate tipping point. Now, you probably remember that Tesla was the main engine of his wealth back in 2020 and 2021, and it still makes up a healthy $300 billion slice of his portfolio. But SpaceX is now the undisputed heavyweight. His roughly 38% stake in SpaceX is valued right around $800 billion. The rest of the pie belongs to his private holdings in xAI, X, and The Boring Company.
Section 1. Anatomy of a milestone. Because look, a $1 trillion fortune doesn't just happen overnight, right? This was a journey forged through extreme, almost catastrophic risk. Tracing this journey back, there's just a massive contrast between where he started and where he is today. Back in 2002, Musk walked away from the PayPal sale with about $180 million. He took a massive $100 million of that and poured it directly into founding SpaceX. By 2008, after 3 consecutive rocket explosions, his paper wealth was essentially zero. Literally zero. He was famously living off loans from friends. Fast forward through the massive Tesla run-up in 2021, and here we are at the historic peak in 2026. You really have to appreciate the sheer risk tolerance required to survive that 2008 era. That pressure cooker set the foundation for the aggressive, hardware-focused company we see today. Looking back at that near-death experience, Musk himself said it was the last hour of the last day that it was possible we would have gone bankrupt. They closed their financing on Christmas Eve, just days before payroll would have bounced. Surviving that crucible forced SpaceX to become relentlessly efficient. And to survive that era, they built an absolutely incredible business moat. Instead of outsourcing to the usual defense contractors, they integrated vertically. They built their own engines, their own avionics, and most importantly, they secured that crucial early mover advantage in reusable rockets. They landed those robust NASA partnerships, starting with the life-saving commercial resupply services contract, and then used all that momentum to launch their global internet provider, Starlink. By applying first principles thinking to reusability, I mean literally landing rocket boosters on drone ships in the middle of the ocean so they could fly again, SpaceX completely disrupted the aerospace industry. Just look at this comparison. Previous launch cost to low Earth orbit hovered around $10,000 per kilogram. SpaceX's Falcon 9 dropped that to roughly $3,000 per kilogram. That aggressive pricing practically eliminated any significant competitive pressure, essentially handing SpaceX a virtual monopoly on commercial space access.
Section 2. The engine behind the wealth. Because let's be real, affordable rockets alone aren't enough to build a nearly $2 trillion public company.
The true financial engine driving this insane valuation isn't just launching hardware, it's recurring, predictable subscription revenue. Look at Starlink's explosive growth. It surged from $7.6 billion in 2024 to $11.4 billion in 2025. That's a roughly 50% jump in 1 year. They've effectively created a massive cash flow flywheel. Starlink brought in about 61% of total company revenue in 2025. And it's this steady stream of subscriber money that funds their most ambitious, crazy projects, like the Starship program and their huge AI data centers.
The vital takeaway here is exactly where that Starlink money is actually coming from. Rather than trying to battle core telecom giants like AT&T or Verizon in those highly saturated urban areas, Starlink dominates a massive $129 billion niche opportunity. They're out there capturing all the dead and low-density zones. We're talking maritime, aviation, rural homes that can't get cable, and remote operations like offshore oil rigs. It's a total greenfield opportunity, and there are almost no real incumbents for them to displace.
And then, right before the IPO in February 2026, SpaceX completely absorbed Musk's artificial intelligence venture, xAI. This move added a massive, brand new recurring revenue stream. SpaceX's S-1 filing revealed a staggering $1.25 billion monthly compute contract with Anthropic to use SpaceX's Colossus data centers. Think about that for a second. So now investors aren't just buying into a space company, they're buying an AI infrastructure powerhouse.
Section 3, the retail investor opportunity. Let's pivot for a second and talk about what this means for your portfolio. Because the mechanics of this historic IPO broke all the traditional Wall Street rules, and they did it intentionally.
Making its highly anticipated public debut under the ticker SPCX on June 12, 2026, the company raised a monumental $75 billion. It totally blew past previous records set by giants like Alibaba and Saudi Aramco, becoming the absolute largest initial public offering ever. The shares were priced at $135, granting the company an immense, unprecedented initial entry valuation of around $1.77 trillion.
Now here is where it gets truly revolutionary for the everyday investor. Usually, in a standard blockbuster IPO, retail allocation, the shares actually set aside for regular people, is stuck in the single digits. The big institutional banks always take the lion's share. But instead of locking everyday investors out, SpaceX allocated a massive 30% of its shares directly to retail accounts on platforms like Robinhood, SoFi, Schwab, and Fidelity. This democratized the wealth creation event in a way that Wall Street almost never sees.
But as we know, public markets can be notoriously unforgiving, and the initial trading volatility proved exactly that. Retail and institutional excitement drove the valuation above $2 trillion on day one. By June 16th, the stock peaked intraday at over $225 a share. But then, gravity set in. Investors started digesting the realities of such a massive market cap, and that caused a sharp pullback to around $165 just a week later. So those who got in at the $135 IPO price are still sitting pretty, but anyone who bought the peak is currently nursing some pretty significant losses. Section 4. Weighing the risks. As enthusiastic as we all are about this technology and this historic wealth generation, we really have to objectively evaluate the inherent risks of buying into a newly public company operating at this kind of unprecedented scale. Investors are facing some strict realities here. First off, this valuation is priced for absolute perfection. Any slight miss in subscriber growth is going to be punished hard. Second, there's the massive capital-intensive spending. We're talking up to $119 billion just for the Texas Terafab data center build-out alone. Third, you've got looming insider lockup expirations, which could suddenly flood the market with shares. And finally, perhaps the heaviest anchor of all, extreme key person risk. Elon Musk's singular vision is what holds this entire thing together, but his attention is famously divided across multiple massive enterprises. However, long-term investors are banking on a company whose explicitly stated vision goes way beyond terrestrial quarterly profits. As Musk recently posted, the ultimate goal remains a self-sustaining city on Mars in 20 to 30 years. When you buy in, you are investing in a firm that is fundamentally attempting to alter the future and the survivability of humanity itself. Which leaves us with a big question to ponder as we watch this historic stock unfold in real time. With a man who just became the world's first trillionaire at the helm and a retail base that is heavily invested, is the commercial space economy truly just lifting off to even higher stratospheres? Or is this $2 trillion valuation already priced for absolute perfection? Keep a close eye on SPCX because the next few quarters of earnings are going to be the ultimate proving ground. Thanks for joining me on this explainer, and I'll catch you on the next one.